Now let's do a little bit of math, because one of the things investors want to know is how many services do you need to do, or how many products do you need to sell in order to break even. But what is break even? Well, we're going to do a little bit of a break-even analysis. So a break-even analysis tells us how many units we need to sell in order to make zero money. So in other words, this is where your total costs equal your total revenue. So at this point, no money is made. I didn't lose any money, I didn't make any money. So by understanding my break-even analysis, I can set reasonable sales goal to figure out how much I actually want to sell, how much I actually want to make, and I can also make sure that I'm operating at a level that doesn't bring me a net loss. So this is really good for investors to know. So how do we find this? Well, what you're going to do is you're going to take your total costs and you're going to divide it by your price per unit. What this will give us is the number of units we need to sell. So let's look at a really basic example before we dive into Yotes Co. Let's say that my total costs are $120. And let's say that my price per unit is $10. Right? I need to sell 12 units in order to break even. At 12 units, my net income, $0. At 13 units, I'm making a little bit of money, and at 11 units, I'm losing money. So we just kind of want to understand, how do I get this number, and this is the number that we want to give to investors. So if we're looking at the Yotes Co example, and you should have that in front of you, we're going to take these numbers straight off the income statement. So for total costs, we're going to look at our total expenses line, and that's $128,000. I told you guys in the income statement that I'm selling for $5 a piece. We're going to take that $128,000 and we're going to divide it by 5. So remember that this is money and this is money. And this will give us the units at the end. And we get 25,600 units. But obviously I'm not dealing with units, I'm dealing with pineapples. So I need to sell 25,600 pineapples in year 1 in order to break even. So that is kind of the most simple way of solving for break-even point and trying to figure out kind of like what that zero line is. There's also another way. So if you're an accounting or finance major, or you're just really into math and you have a really detailed understanding of your financial statements, there's another way that you can do this. So this way, totally acceptable. Both of these ways will bring you the same number. So it's just kind of how you personally have your financials laid out in your plan. The other way you can do it gets a little cost accounting-y. So what you're going to look at is you're going to have a very similar formula to here, right? So you're going to take all of your fixed costs. So fixed costs are the ones that they never change, right? So if I'm paying rent for a building, it doesn't matter whether I make 0 of my product or 100 of my product, my rent never changes, right? So you're going to look for those static expenses and you're going to total them up, and that's going to be your numerator. Then what you're going to look at is called the contribution margin. And the best way to kind of describe contribution margin is how much of your sales go towards your fixed costs, right? So how do I find that? Well, I'm going to take my sales price and I'm going to subtract out how much it costs for me to make, or do, if you're a service company, my product. So I'm going to take out all of the variable cost components, right? Because my variable costs only occur if I make that pineapple, or if I do this, if I do that. These are encompassed in the sales, right? So I'm going to take this variable cost out so that all I'm left is the sales fixed cost component. So in terms of Yotes Co, I looked at my income statement and I came to the conclusion that roughly, and this can be kind of hard to find, so if you don't have these numbers, again, you can just use this method, was $51,200. I'm going to divide that by my sales price, which is 5. And then my variable expenses I said we're 3. So I'm going to get 51,200 divided by 2. And I get 25,600 units. So again, this is just another way of kind of showcasing this break-even point. This gets very accounting-esque, so this is 100% a good way to figure out your break-even point. I did it for 3 years. I like to look and just kind of see, like, as my expenses change, as my company grows, how does that break-even point shift? So I recommend probably doing at least 2 years, try and hit 3. Do it for whatever years you have the income statement for, just so we can kind of see as your company grows, like, what the effects are. So yeah, I would have a little chart or something that just kind of summarizes this information, maybe a couple of sentences explaining, like, just what exactly this number means. And good luck. This is the break-even analysis.